What I hope to do in the next 15 minutes is to convince you that if we want to build a fairer world, we need to focus on creating access to economic opportunities for millions of poor people. And I also hope to convince a bunch of SIPA students that the private sector needs to be central in creating those linkages. I'll start from my early days. When I was 21, I jumped on a freighter to Peru and ended up working with a Peruvian team, living in a slum, and helping low-income people in the barrio gain access to water, sewage, light, and small business opportunities. What I learned from that experience is that low-income people have much more innovation, much more initiative, much more courage than I do, and they are certainly better at doing more with less. In women's world banking and in my years at the World Bank, I saw that small business, micro business were powering local economies. I also learned from Elabat in India that if a low-income woman earns 100 rupees, 93 of those gets back into the mouths, medicine, and school books of her children. Much more efficient than if that 100 rupees got in the hands of her husband. What I have seen in enterprise solutions to poverty is that some of the leaders of corporations that are showing the way in how to build shared value with millions of small producers, distributors, and consumers actually started out as micro entrepreneurs. What we have seen is that in Money Matters, after 20 years of experience in micro lending, we can say that microcredit is an important instrument of economic empowerment. We can also say that we've learned a lot of lessons. As you know, over 100 million low-income people, largely women, have gained access to financial services, mainly credit, in that period, and almost all of them have repaid their loans on time. So I think they have done their part. They have shown that they are good and bankable clients. What we've also seen is that of that 100 million, the vast majority of the access has been provided by about 100 institutions, with thousands of NGOs trying to replicate models that may have worked elsewhere and failing along the way. The giants in microfinance have also learned lessons. We have done recently a set of interviews with some of these giants, and almost all of them say three things. They say, we wish we had spent less time banging out the loans and more time really understanding the client and building a whole series of profitable credit, savings, payments, insurance services that would help them build both income and assets and protect themselves against vulnerability. They say that they wish that they had spent less time trying to mobilize foreign equity, which has often gotten them even more narrowly focused on short-term objectives and products, and spent more time building the leadership of the future and a strong mission and client-driven culture within their organizations. And they also say they wish they had been less macho in terms of showing that they were more Wall Street than Wall Street, and that they should have spent more time really building a movement among microfinance institutions, banks, and cultivating policymakers and regulators so that they would become less vulnerable to political interference. The good news is that with the success of microfinance, bankers have learned how to bank with low-income people. And so you find in Latin America that many banks have built what we call banking correspondent agent models with mom and pops providing low-cost distribution of payments, savings, insurance, less credit. We see mobile carriers copying the success of M-Pesa in Kenya. We even got the chairman of China Mobile to go to Kenya to see how successful they had been in building rural payments, savings, and credit and insurance for millions of low-income people. And what we see is that still the majority of poor people lack access to financial services, and that it is going to have to come from more and more mainstream commercial banks, mobile carriers, and other actors seeing the light in terms of this as a market opportunity. If you look at India, for example, after 20 years of very rapid growth in microfinance, the sum total of all microfinance institutions equal $4 billion in assets, which sounds like a very big number until you look at the need and until you look at the fact that the banking system has $800 billion in assets, dwarfing the power to create access among low-income people. The other thing that we've learned is that while money matters, in many cases for low-income people, if they are going to truly transform their lives, they need access to not just money, but also markets and technology. One of the leaders of women's rural banking, Jennifer Ruria, likes to say that if I'm a poor woman, a farmer in rural Kenya, chances are I should not be borrowing. And people kind of go, how can someone that has created an institution involving 500 million women in Kenya and the global chair of women's rural banking say such a thing? But the reality is, if I am a subsistence farm family and I get a loan, without transforming my productivity, without changing my market links, I'm just increasing my indebtedness. I am not really transforming my productivity or my capacity to generate income and to repay those loans. If we look at the transformation of Bangladesh, everybody likes to talk about Grameen, but in fact, there are at least 3 giants equal to the size of Grameen, and equally important to Grameen has been the money that young men have sent back from their work in the Middle East. Equally important has been the money that young women have made in garment factories, which have enabled them to actually have many more choices in terms of who and how they will marry, in addition to the 30 million people that have gotten access to financial services. It's very important to not lump all poor people into one blob, but to really understand the dynamics of different markets. For example, in China, today, remittance transfers from the 200 million young men and women sending it back to their families now represents more income for rural families than agriculture does. And so that infusion of new income actually has created a dynamism in rural China. And thank God, after 3 years, we have gotten China Mobile to use its 1 million agents in rural China to provide access to payments, insurance, savings, and credit services. So it's each country differs, each segment of clients differs. What we also see is that if we really want to tackle fairness in this world, we have got to focus on agriculture. As we know, the majority of poor people in the emerging markets, in the developing world, live in rural areas. And the majority of those rural people, and really all people in those countries, depend on agriculture as their primary source of income. But as I mentioned, a poor farmer is not going to get unpoor with a microloan. They need access to inputs, advice, financial services, and markets. Who is going to provide that access? It's not going to be NGOs, which normally have very limited bandwidth and can provide demonstration projects. It's not going to be government that are pretty lousy at organizing value chains. So it really needs to be agribusinesses. Fortunately, because most agribusinesses that are from places like India, China, Kenya, Colombia know that they need to figure out ways to deal with small farmers, many of those companies are showing the way. My favorite example is Jane Irrigation. Jane Irrigation is today a billion-dollar company, which has transformed irrigation to work for millions of small farmers. It was started by a guy from a very poor rural family who was smart enough to make it to university, and when he graduated, got an offer to join the elite civil service of India. And he asked his mother what he should do. And she said, you know, anybody can be a civil servant. Anybody can actually start a small business and take care of their family. But nobody is worrying about the poor farmers of India. Nobody is worrying about how to conserve water, which she somehow had figured out was going to be an increasing scarce commodity. And so Jane, through its multiple generations now, has a single-minded slogan, motto, dedication, saying that if we can make poor farmers rich, we will do well as a company. And the fact that they have been so successful in building value chains with small farmers, in creating banana tissue culture for selling 60 million this year, has enabled us to work with Jane to mobilize the 60 leading companies and banks in India who are now committed to engaging at least 20 million farmers by 2020, building shared value, building productivity and incomes. We also know that the private provision of health, education, and energy and housing matters. You could say that the government really has the responsibility to provide basic education and health. The problem is most poor people have very lousy access to those kinds of services. And so what we see increasingly are social entrepreneurs and large companies that are figuring out solutions. Many of the large pharmaceutical companies end up doing PR type CSR ventures or dumping drugs through government distribution channels in developing countries. But Novartis Arogia Parivar has been able in India to develop a two-pronged approach with salespeople in 11 states and village health educators. So they provide education to largely women clients, and they back local chemists and village level doctors. Through this strategy, they have become profitable in under 3 years, and they have increased their market share of rural India from 0 to 1%. And that, of course, captured the attention of the leadership in Basel, and now the leader of Arogia Parivar in India is doing it in Indonesia, the Philippines, and Kenya. Likewise, in China, we see that when we talk about NGO-type social enterprises, you really don't find that in China, and it kind of does not fit the reality. What you do find is a 40-something-year-old guy who, over the last 10 years, has built New Oriental, which has trained over 5 million Chinese in English using large classrooms, larger than this group, so to be able to offer low-cost training and get Chinese students enough English that they're able to come to places like Colombia. So what we're finding are new models that involve cross-subsidization, that involve some of the combinations of technology and touch that we saw from a previous speaker, and that are really building transformational solutions which work for the poor people and work for the businesses that are providing those services. Of course, we need the kind of private companies that actually see the future in building shared value with millions of low-income people. We all know the perils of Wall Street, where many financial institutions have operated based on greed, have created wealth mainly for themselves, have created secondary market instruments that largely add no value, and that got us to the brink of a global financial crisis. Fortunately, there is another class of companies that actually see opportunities in building value and values. In 2008, Harvard Business School celebrated its 100 years. And some very visionary professors pulled together CEOs in groups in the United States, Europe, Latin America, and Asia. And their question was, does the private sector have a role to play in solving global poverty and in dealing with the environmental issues of the world? So after a day of deliberations, 60% of these CEOs in the US, which was the group that I participated in, said yes, we do have a role to play, and it has to be through profitable solutions that actually have a very massive outreach. So we even got the dean of Harvard Business School in India to come to rural India and actually see what is meant by how you build shared value. Networks matter. In women's world banking and in other networks, in microfinance, you can see that NGOs can have more of a role, not in trying to build massive institutions, because very few have been able to do that, but can have a tremendous role as catalysts in actually building a movement of private sector actors and building the commitment and the know-how in how to make a difference. Finally, you matter. You know, for the students of SIPA and Columbia Business School and those listening from around the world that are about to venture in the world, I would strongly suggest that you jump in, that you take risks, that you do not pass go, you do not join McKinsey or Goldman Sachs. You know, consultants, and I worked for McKinsey as my summer job at HBS, but in Tanzania on how to make socialist villages economically viable. The consultants are good at analyzing stuff. Investment banks are good at making money largely for themselves. What we really need in this world are people that know how to build inclusive businesses. And so I think, in my case, the best decision I ever made was jumping into a freighter and going to Peru and figuring out what I was going to do on the other side. You know, working in the slums of Peru with an all-Peruvian team, building small business and access to basic water, sewage, and light gave me a connection and helped me build respect for the people that I have served ever since. So I think if you jump in, if you continuously try to figure out how you can increase the value that you are adding, you can and you will make a major difference in your lifetime. I would strongly suggest that we think big, that we do not hesitate to jump into companies or banks that have an inclusive business agenda, because that is where you are going to learn how to create your own company or organization someday. And I think it's very important to find your passion and your purpose and to go for it. Thank you very much.